Hello investors, welcome to the channel where I use technical analysis to find possible swing trades. Today we're taking a look at an unusual choice, that is JP Morgan Chase, ticker symbol JPM. I feel like this company needs no introduction. It is the world's largest bank, certainly the largest bank in the United States. And it is certainly a large cap company. You'll see the market cap right over here at currently $431 billion. And here we are on JP Morgan's annual chart. And I'm just going to briefly go over the chart here for a moment. And then I'm going to come back to it. And you'll see that it is right in the middle of all the moving averages here. Not exactly a strong buy or sell signal. We look down at the RSI, you'll see it is falling. It just broke below the 40 line. The stochastics are falling and they are in the oversold zone. The volume shows a recent spike in volume with mostly selling, and it was declining, as you can see, for several weeks. And then we get this uptick and selling pressure. And the MACD broke below the signal line again 2 or 3 weeks ago, and it's been falling ever since. And you might look at this and say, we're ready to go higher in share price, and that could be true. But what I noticed here is we are sitting right at the 50-day moving average. And this is shown to be a critical point for JPM. You look back here, it really respects this 50-day moving average. I mean, it has touched it multiple times over the last year, and every time it has either bounced off or it has proven to be a critical point. You see here, when it broke through, it really broke through. And it went from about 115, 116, all the way down to 101, 102. And finally, it returned, burst through that level again, and then we get a touch. We get, looks like several touches in here. It came back, touched again for several days, rose again, came back, touched again, came back, paused here. And finally, it broke through again. And what happens when it broke through the 50-day again? It goes from 138, 138 and a half, all the way down here to 125. And then finally we come back, and what happens when it jumps up? It jumps to the 50-day, and then it touches the 50-day again, and touches the 50-day again, touches the 50-day again, and again, and again. This, I don't know how many times you want to count this. It looks like 4 days where it just rode along the 50-day moving average. And then we had this huge arc where it pulled way above all the moving averages, and now it's falling down. And guess what? Yesterday it closed right at the 50-day moving average. So if the last year has taught us anything, it should be that this 50-day is, as I said, a critical point. If today we get a bounce in the share price and it goes back up, maybe it'll go up 149, 150, whatever it goes to, great. Then we know the 50-day holds. But if today we close below the 50, every time it's closed below the 50 after breaking it, we are in for a precipitous drop in share price of JP Morgan. And this is a significant opportunity either way. If it holds, then you can certainly buy shares and ride it up, or if it drops, you can certainly short. And again, if history is any lesson here, it will drop significantly. And I'll also point out below, we still have this gap here that where it gapped up. And we know this is because of the whole, first the March fiasco in the financial world, and then finally they reported a huge earnings call and they sucked up all the profits from another bank. If there's certainly a lot of discussion around that, if you're interested in that, and that's what caused this gap up. But again, as we know, 90% of gaps fill, and it's down here at around 135. So if it breaks below the 50 and drops down here to the 200-day, there is a lot of vacuum pressure pulling the share price down. And if it breaks below this gap here, we're looking at getting down to below 130, 128, 127. That is a $20 a share drop from where we are at the moment. So just to be thorough, I will switch over and take a look at the fundamentals here, although this is absolutely a strong company. There is a reason this is the biggest bank in the world. You see there is very low short interest, 0.67%, and that is appropriate. Does have more debt than its peers, more debt than 70% of its peers, but that is perhaps the least concerning metric that could be a negative point in this entire sheet. The PE ratio is actually low, less than 10. So we're looking at a PE of 9.66, which is lower than 80% of other banks. If we don't get a gross margin, we do get an operating margin just over 40%, which is outstanding. And that beats out 87% of other banks. Return on equity, again, excellent. It beats out 73% of other banks. The growth rate is excellent, beats out 72% of other banks. And the dividend is about twice the market average at 2.66%. And it is a very secure 25.74% payout ratio. So overall, these metrics are excellent, and it's nothing less than I would expect for a bank of JP Morgan stature. But this is, as I said, a critical level here. And if we close below this today, I expect there to be a significant pullback in share price. If not, well, then perhaps JP Morgan will close in on its all-time highs again at 157, 158 or so. We'll see, but this is the critical period. So please let me know what you think of JP Morgan in the comments below. And please remember that none of what I discussed here is financial advice. I'm not a financial advisor. This is all for educational and informational purposes only. But hopefully you got something out of the video. And if so, I would really appreciate it if you would hit the like button and subscribe to help out the channel. If you enjoy this kind of content, please hit the bell notification to be alerted when new videos are posted. Or if you'd like me to take a look at a specific company using the indicators I present here, mention that in the comments and I'll try to get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.